Welcome to Houston Home Talk, featuring all things real estate in the Houston area. We'll interview real estate professionals, local business owners, and special guests from right here in the Houston community. This is where you get the inside scoop about what's new in real estate, new community openings, and business openings, and much more. The Houston Home Talk Show starts right now.
Hey, what's up, guys? It's James J back right at you with another episode of Houston Home Talk. Excited today to get into jumbo, not jumbo scrimps. No jumbo scrimps, guys. We're talking jumbo loans today. So a jumbo loan is a specific product, all right? Just like an FHA, just like conventional. Jumbo loans are a product that is significantly, I would say significantly, but higher price point. So as of January 1st of 2018, a jumbo loan was considered a mortgage loan of $453,100 or higher. That will be considered a jumbo loan. Now, keep in mind, if the price of the home that you're looking at is $600,000 and you put down enough money to get it to $453,000 or less, then you do not have a jumbo loan. All right, it's not a jumbo loan. Pricing on non-jumbo loans is typically a little bit better, meaning the interest rates are a little bit lower, typically. Definitely some things to consider as you're getting a jumbo loan. Credit score is going to be huge in determining what kind of rate, as it will be with any loan for that matter. But definitely something to keep in mind. You know, if you are in a situation where you can get your mortgage loan to $453,000 or less, $453,000 or less, that is the way to go. So in high price areas, for example, San Francisco, a lot of places out in California, the FHA agency has identified a lot of these high priced areas. So these are places where the cost of real estate is just through the roof. And so they make some exceptions with certain states and certain cities to where their loan limits are going to be a little bit higher than, say, Texas, where I'm at. So, for example, a jumbo loan in the state of Texas, again, would be a loan for the amount of $453,000, 100 or higher. In some areas, for example, California, okay, their loan limit their loan minimum to be considered a jumbo loan would be $679,650,000. All right. Just to give you an example. In Alaska, Hawaii, or Guam, some of their limits go over $1 million. $1 million. So we are in a state, in the state of Texas, where real estate is relatively inexpensive as it compares to a lot of other major cities, which is why Houston, Austin, San Antonio, Dallas are typically always on the top 10 or so places to live for the cost of living. So just keep that in mind as you're looking at a jumbo loan in the state of Texas or a jumbo loan in the state of California, as an example. One thing to keep in mind about jumbo loans, though, unlike traditional mortgages, typically jumbo loans aren't sold. So that means the lender, whoever that is actually servicing that loan as well. For some people, they think that is important. In my opinion, it really doesn't matter. It doesn't change a whole lot. The only thing that may matter is if they're servicing the loan, the lender may be able to be a little more creative with their loan programs because they're servicing it. Other than that, I don't think it's really a big deal whether the loan gets sold or not. But typically with jumbo loans, they do not get sold off. Typically. Depending on the loan amount and the terms that the jumbo loan lender is offering, it may also be wise for you to explore other options since jumbo rates are typically higher than those on traditional mortgages. So again, that goes back to getting your loan amount under that $453,000 threshold. Again, it does not matter what the sale price is, it's the loan amount. Now, there are some alternatives to also help getting your mortgage loan to what we would consider a traditional loan amount, which is again $453,100 or less. One of those options would be a piggyback option. So that basically is going to involve two traditional mortgages. The larger of the two is the high cost area for mortgage. This is followed up with a second mortgage to bridge the gap between what Fannie Mae or FHA will allow, the down payment, and what you as a buyer needs to close the deal. The bottom line is we're trying to get the loan amount under that $453,000 threshold. That's why we do this, because the rates are significantly different from jumbo to non-jumbo, or what we consider conventional type loans. And I don't mean a conventional loan in general, I'm just mean anything under 453. So with conventional loans, mortgage insurance will often be required on the transaction in which there is less than a 20% down payment as well. Jumbo loans, oftentimes people have 20%. It's not necessarily a requirement to have 20%, but in any mortgage situations, the more you put down, the better. Now, although it's true that second mortgages carry higher interest rates than the first mortgages, it still may be more cost effective to carry two mortgages than to pay the mortgage insurance premium on just one. The other thing about having two mortgages or two loans in place is that second is typically, yes, it's a higher rate, but it's going to be paid off in a much shorter time. And the savings that you get from not having to pay mortgage insurance if you do two loans can be a pretty significant savings for you. So definitely something to talk with the lender about. They can run all types of scenarios for you and let you know what's the best option for your situation. Keep in mind that lenders of the first mortgage has to approve any subsequent mortgages. That means that second mortgage. So the first lender actually has to be okay with you having a second mortgage, because it basically is a risk for the risk for the first mortgage will be higher once added. Okay, let's do that again. Keep in mind, the lender of the first mortgage has to approve any subsequent mortgages that you as a buyer may want to take out, because the risk of default for the first mortgage will be higher once the second is added. Hope that makes sense. So there's an added risk for the first mortgage when you get a second. So you got to keep that in mind. Look and check and see if there's any additional fees as it relates to doing that. But again, because you're saving so much on the monthly mortgage insurance, it may very well be worth it. Even small differences in interest rates on larger mortgages can quickly add up to a significant difference in interest expenses over time. So it's super important, guys, that all the options be explored with your lender. If you've got a great lender, they will be able to break this down for you and see which way they can save you the most money. That is what their job is. It is to figure out the best product and pair it up with your situation. Ultimately, you are the final say in this. You make that decision, but the lender is there to give you the best information that they can to help you make that decision. So if you guys have any more questions as it relates to jumbo loans, reach out to me. I'll be glad to help you as well. Head on over to HoustonHometalk.com as well, guys. More resources there. Thank you for tuning in. We'll catch you guys on the next episode of Houston Home Talk. Peace.